Welcome to BPI Trade's Stock Market 101, and I'm here to teach you the basics of stock market investing. In order for us to understand stock market investing, we first have to understand why we invest. So, why do we invest? It's really for our money to work for us. It's not enough that we work for money, but it would be better if our money earned for us as well. This is what we call passive income. We also invest so that we beat inflation. Inflation is defined as the rise in the prices of goods and services over a period of time. If we just keep our money in a savings account or in a time deposit account that earns about 2 to 3%, then inflation will negatively affect our savings. Reality check: are your savings enough for your future? Again, as I've mentioned, it's really not enough to just save, but instead, let's invest so that our money can have a fighting chance against inflation. How likely are you to achieve your goals and dreams if we just simply save and not invest? If your goal is to own your first car, let's say it would take you around 17 months of saving. Investing can potentially shorten that period. Now, since we're in the topic of stock market investing, let me show you an example of how the stock market outperformed other asset classes in the long run from 2006 to 2015. The stock market may have taken a dip around the year 2009, but it eventually outperformed the other asset classes by 2015. If you had invested 100,000 pesos in bonds, you would have earned around 60%. If you invested in the stock market from 2006 to 2016, on the other hand, your 100,000 would have almost doubled with a 94% return. For us to be able to understand how stock market investing works, we first need to understand what stocks are and what the stock market is all about. So, what are stocks? Stocks are simply units of ownership of publicly listed companies. There are both private and public companies, but you can only buy and sell shares of publicly listed companies. Once you buy shares of a company, you immediately become part owner of that company. Let's say you buy shares of JFC or Jollibee Food Corporation. You can confidently walk in a Jollibee and proudly say you are a part owner of the company. So now that we understand what stocks are, we will now talk about the stock market. The stock market is basically the place where the shares of publicly listed companies are bought and sold just like a regular market. When you trade in the stock market, the prices of stocks are determined by supply and demand. If there is more demand for certain shares, the price of the share usually goes up. Take note, when shares are traded, the transfer of ownership does not affect the actual financials of the traded company. As I've mentioned, only publicly listed companies are traded in the stock market. So, why do companies publicly list in the stock market? The answer is simple. Companies usually go public to raise money for capital expansion. A company going public also means the company spreads the risk of ownership among shareholders. When a company's shares can be traded, this will unlock the real market value of the company. The process wherein a company goes from private to public is called an initial public offering, or IPO in short. The process wherein a public company issues more shares is called a follow-on offering, or FOO in short. Now, how do we actually earn from the stock market? How do I make money in stocks? There are two ways to earn. One is through capital appreciation, and the other is through cash dividends. Capital appreciation is simply defined as an increase in the price or value of an asset. Just like any other investment, you expect your money to grow over time. Now, what we have here are the top 15 of 30 stocks in the PSEI, or the Philippine Stock Exchange Index. When I say top 15, this is in terms of price or capital appreciation. When we say PSEI, it is the weighted average of the top 30 companies within the Philippine Stock Exchange. When you hear news saying that the market is up or the market is down, it's mainly due to the performance of the PSEI. The companies that make up the PSEI are usually the blue chip companies. These companies are the ones we are usually familiar with. Companies such as Ayala Corporation, Aboitiz Equity Ventures, Jollibee, and Universal Robina Corporation, to name a few. These companies are well-established and financially sound companies, and they have operated for many years. In terms of stock prices or capital appreciation, the top performing company from 2009 to 2019 is JGS, or John Gokongwei Summit Holdings Incorporated. The price was 1 peso per share in 2009, and it went up to 65 pesos per share in 2019. If you have invested 100,000 in JGS in 2009, your 100,000 would be around 6.5 million pesos today. JGS performed at around 6,400% from 2009 to 2019. Similarly, if you had invested in one of these top 15 companies back in 2009, your investment would have grown today. For first-time stock market investors, we highly recommend investing long-term in blue-chip companies, companies that you know and have continuously been growing and improving. When investing in the stock market, you do not need to start with a sizable investment. Through compounding interest, you can generate more the longer time you leave your money. Take this example. If you invested 26,000 pesos in 3 quality stocks such as JFC, MEG, and SMPH in 2013, your 26,000 pesos would be around 65,000 pesos in 2019. Your money could have grown by 251%. Timing the market could be difficult for some, so there is an investing strategy called peso cost averaging. Peso cost averaging is done by regularly investing in the stock market every month or every quarter, regardless of the stock price. So you get to buy more when the stock is cheap and less when the stock is expensive. The second way of earning in the stock market is through dividends. What are dividends? Dividends are simply distributions of earnings back to shareholders. Why do companies issue dividends? Instead of using company earnings for future expansion, companies would rather share their wealth to their current stockholders to entice stockholders to hold the stock. There are 2 types of dividends: cash dividends and stock dividends. Cash dividends are distribution of cash back to shareholders, while stock dividends are distribution of additional shares to existing shareholders. When it comes to investing in the stock market, it's extremely important to have the right investment attitude, because your attitude and mindset can help you when it comes to your investing goals. The first investment attitude for those new to stock market investing is to think long-term. When we think long-term, we allow for more investment risk. If our investment timeline is longer, we have the luxury of waiting for a good exit price. The second investment attitude is to be disciplined. Disciplined investing means regularly setting aside money to be invested regardless of market condition. It's wise to set aside money to be invested every month regularly, so when the time comes for you to invest, you have a certain amount ready to be invested. Disciplined investing is all about forming good habits and consistently doing them. Third, don't be emotional when it comes to stock market investing. The stock market is volatile in nature, so it's best to avoid emotional investment decisions. When market conditions are unfavorable, people tend to use their emotions instead of logic, which usually turns out for the worst. For example, if your investment happens to take a dip, it doesn't necessarily mean that the price has no chance to recover. Sometimes it's best to wait it out instead of accepting the loss. Separate paper loss from actual loss, because if you withdraw your investment, it becomes an actual loss or realized loss. Last but not least is to diversify your investments for stock market investment. Don't just simply put all your eggs in one basket. Don't invest all your money in stock if you know for a fact that you aren't really an aggressive investor. At the same time, don't invest heavily in just one sector. If you invest heavily in the telco sector, for example, here in the Philippines, you only have two, PLDT, Tel, and Globe. If the sector goes down, then it would have been wiser to invest a certain portion to a different sector. These investment attitudes are just our general guidelines for new investors. This concludes our Stock Market 101.